today's topic, which is profit and loss loan. So every day when I go through the live rates, obviously you see P&L as an option there. So today Jose is going to go through all the different options that fall under that category. These are a little bit tricky because they require some documentation, typically from an accountant or a tax preparer. So a little bit sometimes more onerous than the bank statement. That's why we always do the bank statement first. But when they're needed, right, Jose? So can you explain a little bit more about why exactly we use these compared to the bank statements and why I don't do the live rates, obviously, for that reason? And then let's go into the examples if you can, please, sir.
Absolutely. I will call the P&L program a bank statement fallout. I guess we would say, because typically it's a scenario when we have a borrower who's not 1099, because remember, 1099 gives us up to 90% profit margin or 10% expense ratio, depending if your cup is half full or half empty. But when I mentioned that it's a bank statement fallout, because if we do have issues with a bank statement loan, like declining deposit trends, too many NSFs and overdrafts, or large deposits that cannot be documented as business related income, then the workaround for that self employed borrower would be a profit and loss loan, which uses a profit and loss report. Usually we go with the last 12 months, is the least complicated option rather than pushing it out to 24 months. Now, I will state that most profit and loss loans will require some type of bank statement, may require 2 months, 3 months of the business bank statements just to confirm the trends, right? And the P&L has to be close. You got to look at the guidelines to see how close. It doesn't have to be exact, but there is a margin of error above and beyond that renders your report not usable if you go.
Can you explain what you mean there? So if we're claiming we make 10,000 a month and our bank statement only shows 2,000 a month,
Yes,
what
you will. We will have a problem where the report and the real life cash flow do not align,
exactly?
right? So definitely you want to be aware of that. Scour all the options out there. I'm not going to say there isn't one that does not require a bank statement. I'm sure there's some outlier P&L program at a higher rate, reduce LTVs, because remember, higher risk, the risk is going to be hedged by reducing some of the other risk factors. So, for the best option in rate and the options that we are showing in our daily rates this morning are going to be options that are going to require at least the last 2 months business bank statements or personal bank statements if they don't have a business, if they're a sole proprietor and everything's going into personal bank statements. That's okay. You just have to be able to show the source of the money. So let's go into what we're sharing. But again, when you do have those self employed borrowers, try to look at 1099 to see if that's an option, or bank statements to see if those are options. P&L, again, is more of a workaround. So our highest LTV, as is the case with all of our non-QM loans, is 90% LTV. So this is for a primary one unit purchase is the max LTV. And you're looking at 10.875 as our lowest cost option and 9.75 lowest rate option. And this is at the maximum LTV. So, like I usually like to show, I tone it back a little bit on the LTV. Don't max it out to see what kind of improvements in the rates that we get. So we do get a little bit of an improvement here. You do see 10.25 is at par. We can buy that down to 8.75, whereas our previous example, 9.75. So we get a 1% interest rate improvement by dropping the LTV by 5%. And we also get a pricing improvement. So keep in mind, You can make up some of the LTV difference just by the fact that your rate is going to be at least 1% cheaper. And now our 80%, so we could totally get context on this. Now you see 8.75 gives us a little bit of a lender credit. And you can buy that down to 7.625. So always good to give the borrower many options so they can consider. And our investment maximum LTV is 85%. Now, this is with a 3-year prepay. So, lowest cost option is 10.625, and we can buy that down to 9.99. And 80% gives us substantially better options on the investment. 80%, you're looking at 9.125 is at par, and we can buy that down to 7.5%. Wow. And for our house hackers out there, this is for 2 to 4 unit, but I ran it specifically just in case there's any differences for a 4 units, right? So again, 85% LTV, primary purchase. This is the max LTV for a primary 2 to 4 unit, 10.375 lowest cost option, and 9.75 lowest rate option. Our same example now at 80%, and again, we get the awesome option here. 9.125 has a lender credit, and we can buy that down to 7.5%. Those are nice low numbers. Give you the percentage amounts there so you can check it out. And now our 1 unit primary cash out, 80%. P&L program is a little bit higher risk, I assume, because the LTVs, the max LTV is lower, at least on the cash out, than it is on our other alt doc options. So here, 80% is the max LTV, and 9.625 is our lowest cost option. Actually, have a little bit of a lender credit there, and you can buy that down to 8.25%. And again, this is a primary cash out 1 unit. And our same 1 unit as an investment cash out, rates go up a little bit. So we have 10.625 lowest cost option and 8.999 lowest rate option. That is for our 1 unit. And last but not least, our 2 to 4 units, specifically here, 4 unit investment cash out at 80%. Again, max LTV for this option. And you are looking at 10.625 at par, and you can buy that down to 9.125% for your investment 2 to 4 unit cash out at an 80% LTV.
Which exceeds conventional.
Oh, yeah. Yes, by a long shot.
All right. I don't see any questions here, Kyle.
Yeah,
All
no
right.
questions. All right. Well, thank you, everybody.